Good morning, ladies and gentlemen. This is Joe McHugh, your independent candidate for President of the United States. And today we're going to talk a little bit about the market. As you know, I am a licensed commodity trading advisor and registered investment advisor. Non practicing, but licensed nevertheless. My background is in finance and economics. And this is what I like to do when I'm not involved with politics and attempting to restore liberty in America. So let's start with the call that I made just a few days ago. There was a head and shoulders top, and this was on the 24th of February, and we confirmed a down bearish move at 28.2. And since then, the market has run all the way down to 26,000. So let's take a look at what that looks like on a daily basis. You see here that we topped out right up here around 29,550. And it ran all the way down to 2,600. So that's 3,500 points for about a 12% move in the last 2 weeks. And just in the last few days, it's dropped from 29.3 all the way down to 26. So that's about just over a 10% move in the last 1, 2, 3, 4, 5 days or so. Now, on a daily basis, we've broken key levels of support. We've also gapped down a number of times. You see, we've got a bounce here off of 26, and we're approaching, this is a pretty serious nosedive with angle and separation on the MACD. We could get a bounce, and I would not be surprised to see the market rally a little bit over the next week or two to close some of these gaps. That tends to happen, and it's usually a good move if you're trading the markets. Now, from a weekly standpoint, I just want to zoom out so you guys can see what we are looking at here. We have broken through the 20-day moving average and the 50-day moving average, which tends to act as support. It was an aggressive move down. Even though we tend to close a lot of these gaps, I wouldn't be surprised if we didn't close this gap for a bit. The reason being is that we are still well into overbought territory on the chart here and on a weekly basis. And we've got a couple of different Fibonacci extensions or retracements rather to hit that on the way down over the next few weeks. So will it run all the way back up to 29? It could. I mean, most of these gaps tend to fill. This was a pretty aggressive move south. We'll see how that plays out. In any case, what I wanted to bring to your attention was how this started in the first place. Now, I pointed out that just about a week or 2 weeks ago was that head and shoulders top pattern, which I tweeted on the 24th, right here. Tweeted on February 24th, head and shoulders top, which looks like a head up top and a shoulder on both sides. And a break below the neckline is confirmation of that pattern. And then once that confirmation of that pattern broke, it went all the way down to support. It broke the first level of support. It broke the second level of support. And it just bounced off the third level of support, which is where we're at right now. Back in October, on a daily, let's see, I think it was on a daily chart in October. Here it is. So it's not as easy to see the head and shoulders top pattern on the daily chart. But what you can see here is that on October 3rd, this is a weekly chart or weekly candle, and this green candle right here is a hammer reversal signal. And so on October 11th, the Fed announced a plan to purchase $60 billion per month, which is exactly what we were doing in 2008 in terms of the quantitative easing amount that we did in 2008. Now, the question is, why did they do that? And the reason why they did that is because of this head and shoulders top pattern in October, which is it's difficult to see. Okay, so here it is. So we've got a consolidation. The head and shoulders pattern was 1, 2, and then 3, and we were starting to get a breakdown right around here, which is what you see in the daily charts over here. We're starting to get a breakdown, and if we got broke down below this level, it would have resulted in a more severe sell-off. And so the Fed came in and supported the market with $60 billion a month, which is what they were doing back in 2008. Which means we would have broken these levels, which is just below where we're at right now, and potentially would have fallen all the way back to where we started back in back back in 2019 at the end of 2018 would have wiped out all the gains from last year. Now, that's $60 billion a month. So there's a head and shoulders pattern when the Fed announced that. There's a head and shoulders pattern that just formed recently, and the Fed support has not been enough to keep it up. And the reason why I mention that is because, oftentimes when you get involved in the market, when you try to fight nature, sometimes the exact opposite of what you're intending to happen ends up happening, right? And so on a monthly basis, before we move on to that, here's what it looks like on a monthly basis. On a monthly basis, again, we are still well overbought. That's what it means when we're way up here. This is the zero line. We potentially could be, 2016, we started off right here at around 15,500 January. So, yeah, if we break below these lines, and I wouldn't be surprised to see it retrace all the way back to where we were in 2016, because back in 2016, when we kicked it off, we were still approaching kind of. I think some of the tax policies actually did help the economy at that point, and it did turn around. But at this point now, we're starting to juice the economy with the Fed, and it's starting to pull back. So here's what I was trying to say. With nature, when the Fed tries to get involved and they try to control the markets, just like everything else in life, they can take into consideration the variables which come in from the natural world. And climate science is very similar. And because we do not have open source and declassified information, the government is hiding a lot of that behind classification. And so I've been following a channel called Suspicious Observers, and I'll type it in so you can see it. IOUS, and then it's the number 0. So this is Suspicious Observers, and Ben is the main blogger that's running the community. He's got over 400,000 subscribers. Takes a very interesting perspective, and he believes that we are going into an ice age. Now, I tend to think that is highly possible, and the reason why is because of something very similar to what we see in the markets here. When you run something up, let's say for example, you're running up CO2 in the atmosphere, or you're running up variable components. Now Ben likes to argue that the human contribution to climate change is overstated. Based on his math and his science, it looks like that may be the case. He also does argue for aligning humanity with nature, which is where I fall. I believe that we have a responsibility, a moral responsibility, an ethical responsibility not to pollute, just because it's not, to pollute is simply, it's just not the right thing to do. And it represents waste in the supply chain and lost profit from an economic standpoint. That being said, we have a run up in the charts. And let's say that this is a chart of CO2 or anything else. Let's say the planet is warming, and there is evidence that the extremes are worsening and that there is some warming happening. There's some evidence that on the other side of the extreme that we're cooling in other areas. In that situation, whether it's caused by the sun or by human actions, if we have a ice Arctic melt, it's going to result in water freshening of the oceans, and that could end up having the opposite of what you expect to have happen, which we expect the planet to be warming. It could end up causing a reversal by slowing down the convection cycle in the ocean and other things. Now, I'm not a scientist, but I am a chartist. And what I can tell you is that everything in the natural world tends to show up in a chart if you chart those variables. And so nothing goes up forever, and things tend to correct. And so if you see a run up in one area, it's likely to trigger a correction. And I think that is what I see in the charts. I think that's what he's talking about, although not from the perspective of the charts like I do. Nevertheless, I've been following his channel for a couple of years. It provides a very interesting perspective. I think it's important that we open source and declassify the government in order to make sure that we, the people, have the proper information so that we can analyze it from all angles. In other words, going back to what President Reagan said, trust but verify. So in order to understand, the problem or in how to develop the solution, it's important to understand the problem. Again, ironically, under President Reagan, we had the repeal of the Fairness Doctrine, and that was the last time that we had reliable news. And you can go to hijackingamerica.com to see how the pattern of legislative action over the years, over the last 3 decades at least, has contributed to our current situation of corporate election control, hijacked courts, avoided constitution, laws that we can't trust. Net neutrality is basically authorized corporate censorship. We are in a mess, and we need to restore liberty in America, which is the reason why I'm running on a platform of liberty striking back. The two parties got to go. We need to overthrow the status quo. And I believe that the key to doing that is to return to constitutional values and to align our economy with our environment. You can find this at libertystrikesback.com. My name is Joe McHugh. I'm running for President of the United States. And the key parts of the platform are to legalize cannabis, decriminalize all drugs, so that we can get people out of prison, off the pills, off the streets, and back to work. To declassify and open source the government so that we, the people, have access to good information, and we can move our government into the information age and create millions of jobs along with it, so that we can empower our social entrepreneurs to work on the problems that solve actual solutions because they'll have the right information, and to turn our Federal Reserve Bank, which is a dark money source and is absolutely unaccountable and has no transparency, into a clean, green, citizen-owned, and fully accountable, fully transparent credit union in which every American has an equal ownership stake in our economy, so that we can get off of oil and out of oil wars and get into renewables and organics. Again, my name is Joe McHugh. I'm running for President of the United States. I invite you to get involved at libertystrikesback.com. And that is all for now. I'll keep you posted on the markets as they develop. I would say overall, as Warren Buffett said, the markets will fluctuate. However, on a weekly basis, we're definitely still well into overbought territory. We're 10 years into a bull market. It is time for that I would expect a correction to happen, and I would not be surprised if coronavirus is just the start of what's to come for the rest of 2020. Hopefully things get better very soon, but that's what I see for now. Anyway, Joe McHugh, running for President of the United States as an independent, libertystrikesback.com, signing off for now. Thanks.